Hey traders, what's up? Jamie Saettele here. It's October 28th, 2015, Central Bank Day, FOMC, RB&Z. After that, in fact, RB&Z is as just, was it, 2 hours after FOMC, and then you got BOJ later tonight. Um, and, oh, sorry, BOJ's on Thursday. What am I talking about? Yeah, BOJ's Thursday night. No one really knows what time that is. They kind of do it whenever they do it. So topics today, we should look at CAD and crude oil, of course. This is the dollar CAD exchange rate. So I put up a similar chart yesterday. We'll look at an intraday chart. It's a 60-minute chart. And, I've been talking about, I guess, for about 2 months now, the idea or the idea that Europe commodity crosses are topping. So obviously that would be like Euro CAD, Euro Aussie, Pound CAD, Pound Aussie, things like that. So that's kind of one of the deals that we're looking at. But as far as this dollar CAD trade short term, I mean, we've come off huge. Crude oil's up too, really big, but today, and I'll look at that in a second. But the reason for buying today, or the reason I bought and issued a buy alert at 31.60, is that at a really clean price level on a slope basis, and it lined up with two horizontal levels. One being, well, I guess you could say three. The weekly open price is 31.60. You had this high over here at 31.60. And then if I bring up a different chart, you'll see here you see this day here, this this big day we had on, I guess that was the 26th, that was Friday. It's also, so that'd be basically the weekly open, but it was last Friday's close. That was a huge volume day. So the close that day is also 31.60. So it was kind of, I'm actually, well, I would put in a trade if I didn't think the market would move off the level right away. But yeah, so we just sliced right through it. We're 40 pips below it. And this is at this point, I guess, the biggest decline for dollar CAD on a one-day basis. And let's see, you got to go all the way back. At this point, if we were to close right here, it'd be the lowest since April 15th. So it's a pretty big move. So in any case, maybe these slopes come in later at a later point and help us. Also, just the right before, seeing this move before FOMC, it's not that often that you get. In fact, I can't really recall seeing a market move this much, the dollar, that is, before FOMC. So the fact that we got this huge move, it seemed very fade worthy. And I guess at this point, the trade's still in, just missed the stop by like 4 pips, but not really gonna think that's gonna last. So I don't know, we'll see. Maybe you get lucky. All right, so there's dollar CAD. I still think the better resistance is 133. You've got the month open at 33.15, and you've got slope up at that region as well. Combination, it comes in on Friday. Friday high, always favorable to sell into a Friday high if you're looking for the end of a counter trend move. But if that doesn't happen, we'll just have to wait and see. Also, slopes of previous downtrends in dollar CAD. So like here's the slope from dollar CAD. This is earlier in the year. And you can see it's the exact same trend line as the one back here. Not the exact same, but it's pretty close, right? And then that is actually also fairly close to this one. Not as steep, but it's not, it's close enough. So just the idea of that's the angle of downtrends in dollar CAD. And that's kind of what I'm thinking, that we top near 15.1, 16. Man, dollar CAD is tanking. Euro CAD, everything CAD is tanking. Wow. Right into the Fed meeting. I mean, there is absolutely just, this is straight down. Here's an hourly chart. I'm not going to lie, I'm kind of dumbfounded the fact that it's gone this far this quickly. So let's look at crude oil, because crude oil is obviously a story in dollar CAD. It's up huge today. Here's crude, okay? Crude is up right now on the day 6.2%. That just doesn't happen. Okay, so with crude, we also came into our own interesting price level here. This is the high volume level, and the month open was here. We went right through. It was 45.32. Remember earlier in the month we were looking for a low at at this area, and we ripped, and now we came right back. So the it's been, one heck of a move of false starts across many markets. But remember, this is the analog for crude, and I know it's at this point several days past, or like a week. If we look on the weekly chart, you can see it kind of better, I think. And last week was the week we were looking for a low, but if that low happens this week, you're really going to totally ignore it? I don't think so. Remember, it was the comparison between the 1996 to 1998 decline, 105 weeks down, and then the decline from August 2013 to August 2015, 104 weeks down, right? And the forms were really similar, both 5-wave declines, right? 1, 2, 3, 4, 5, right here. 1, 2, 3, 4, 5, and you had a rally and a new low in both of them, and then the second base that formed, was very similar as far as getting 3-4 weeks up, and then kind of chopped down for 1, 2, 3, 4, 5, 6 weeks. Last week was week 6. This is week 7, so it's a week behind. But again, with the action that we've got here today, it's 6% up. I mean, kind of hard to argue that it's not an important technical development. And there goes dollar CAD. It just stopped out. Awesome. So for me, again, the median line's big. It was resistance before. I thought it was it. This was it when we broke above here, but it was not. So if we break back above here, then we'd look to be bullish again on crude specifically, and probably dollar CAD as well. And the fact that dollar CAD's fallen the way it is right now tells me that I'm not sure 133.15 is in the cards at this point. Kind of needed to see support at 31.60. We just broke the Monday low, by the way, which was 31.20. So it makes an intra-week reversal. And I'm not sure, maybe I don't know, maybe the Fed statement was leaked or something, because this is a lot of movement before a Fed announcement. But we'll move on. Okay, so let's move on to some of the things that we've been following. Here's dollar CAD again. Euro CAD. Came into the week wanting to sell strength. I pointed out 2 levels, 46, 60, 75, and last night 47.30. Well, today's level is today's high is 46, 67, so maybe that was it. Um, we have 47.30 a little higher. Didn't really have anything on a parallel downslope here. You did up at 47.30. Again, FOMC's coming, but not sure it's going to do a whole lot to get EuroCAD all the way up to a resistance level like 47.30. Also making obviously an outside day reversal today. And maybe time to resume downside in EuroCAD. Euro Aussie is a similar pair as far as the Europe commodity deals concerned. Oops. So Euro Aussie is the 60-minute chart. Get rid of that short-term one that I showed last night. Okay, so here's the 60-minute chart. We have actually hit, I pointed this out this morning on Twitter, right when we were actually at the high, which would have been 70 or so pips ago, that we had run into former support. Okay, so support, we had support from the sliding parallel, which was really precise back on August the 5th and August the 7th, and then of course on the 12th of October. And we've come back into that level now and have responded to it as resistance. So we're in the right spot for a turn lower in Euro Aussie as well. An even better spot would be 55.80 or so, which is actually the low from August 30th. That was after the big reversal. And you have an exact confluence up there from parallel, the upper parallel on the new bearish structure, which was again resistance last week too. Okay, so in the right zone basically for a top in Euro Aussie. This would have to be a trade where you put a stop up above 158 with probably a quarter of the position size, much bigger, idea than a short term. I mean, I'd be looking for, probably at least down near 149, if not even the year open, which is 148.26. So, would be quite a ways away. And bottom line is you got this new slope, so you might as well just follow it. I mean, as long as it's followed, you'd be looking for the lower parallel wherever that may be. It could be in a while. Okay, it could be. Sorry, I'm trying to pull this up. Okay, it could be all the way down potentially. 47.90 is a 618, for example, of the advance from this year down, the April low up to the high that we had back in August. You've got longer term, kind of support there from an old parallel over the next few weeks. I mean, the point is that the trend is, again, I think it's changed. Europe and against commodities going lower, and the big story is commodities have turned higher, which means you want to buy dips in Aussie and buy dips in Kiwi and whatnot. We'll get to that here in a second. And that's why I've been looking at the Chinese stock market so much lately. So that's, where we are. And that includes setups in the shorts here, okay? Another trade that is setting up to be pretty interesting is pound CAD. Just like Euro CAD on the short side, pound CAD on the short side. Here's the chart, daily chart, right now, actually. Um, it's the old median line and ended up as resistance today and last week. So making a big outside day reversal today in pound CAD. Is this the beginning of the next big leg lower in pound CAD? Maybe so. Okay. Again, you do have a downtrend here. It's lower lows and lower highs. You could even do something like this. This looks like the same angle. And it is. So you've got good angle resistance up here, right? And you'd be looking down towards at least this lower, lower parallel here, line that extends off these supports. So lots of these CAD crosses, especially if, I know I said Euro Aussie and whatnot, and maybe pound Aussie and whatever commodities, but if we look at even Aussie CAD, I mean, CAD might really be the big one to gain over the next number of weeks and even longer. And let's see, Aussie CAD, I put one of these charts out last night too, I think. If we get to Aussie CAD though, okay, it's 240-minute chart. So 4-hour chart, going back again to the high in April and slope resistance last night, kind of pinpointed it. You had a crappy, I guess, Australian CPI report came out. Combine that with what's happening today in the Canadian dollar, and Aussie CAD is it's the biggest. If you were to combine two major currencies to make a cross, Aussie CAD is the biggest loser on the day. So it is down I think it's let's say 1.8, 1.8% right now. Yeah, so Aussie CAD, huge down day in that cross. And again, you can think about it like being short gold against a long oil position or something. So, we might have a big theme trade there. And again, this is a longer term trade. If you look at the long-term picture for this thing, Aussie CAD, this is something we were looking at months and months and months ago. But it's a daily chart. It's actually even a different slope, but it's the same result. Say it's the same slope, but with three different points. Excuse me. So remember, what we're talking about here is basically a head and shoulders pattern with a really screwed up right shoulder that's taking forever. But a lot of times, those are the ones that that end up giving the strongest price moves. So it takes so long that no one can wait for it. You just kind of like have to be in it in order to be on this trade or to take advantage of this trade. All right, so it's like this. There you go. Little head and shoulders pattern. I don't really need to draw that thing. All right, and the implication from this, obviously, if we break, lower prices, and had a false break, obviously, back here in August, but came back into resistance now, and we've obviously responded at resistance. It's a huge decline today. So the target for this is about 80 cents. You're just taking the width of this level. You could go 80, or if you, a little conservative pattern, probably conservative target would be closer to 84 using these lows down here. That's actually pretty close to the low that you had in 2010, down over at 80, near 86. So, even at the current level that we're at, what's this, 94? No, sorry, 93.60. There's a lot of downside here. Okay. So at this point, with this coming off these levels so hard, probably draw a line over that. That's 95.80. Call it 96 for a stop. Would be looking for a break here. So kind of a little flag break to get us started on the big breakdown towards towards the 86 area. So that's the big theme stuff, really to look at, in my opinion, right now is the Canadian dollar, which, as I look, is still going lower. We are almost at 31 now. Let's see what crude's doing. $6.25%. What's this here? We got some questions. Look at the questions real quick. Lots of comments here. Okay, so that's with dollar CAD. I also wanted during this webinar to kind of drop some realities down about trading. We had, let's see here. We've got FOMC coming up and RB and Z, blah, 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 and blah. At the end of the day, you're not going to have any insight into what these people are going to do. And even if you do, price is going to do whatever the hell it wants to do anyway. So, like we've seen, for example, we've seen them come out and be so-called, like this is, here we are, this is, we can follow this anymore. Here's the US dollar index, right? We've seen them come out and be so-called hawkish or so-called, not hawkish and dovish, and the dollar go one way. And everyone thinks it's going, they've been dovish, dollar's gone up, they've been hawkish, dollar's gone. So, I mean, at the end of the day, it really does not, matter, in my opinion, what is said or not said, maybe other than an initial knee-jerk reaction. So today, for example, when they come out, there's a specific level index I'll watch, 1206.5. It's the high day close, or what we call daily reversal resistance. Still think there's the possibility that this thing grinds into a top over the next month or so. The big move lower in the dollar, you still have this support to contend with down here, okay? But again, as posted recently, there are warning signs, and plenty of them, that the dollar is actually in a bear market already, and dollar SEK is one of the biggest ones. This is, kind of something that a lot of people follow. It leads oftentimes. For example, the big breakout in the dollar that we had in 2014 actually was dollar SEK was really the first to break out. Okay. So follow this, there's still resistance higher. Who knows if they want to come out and this dollar wants to rally. If it does, then there's still resistance up here. So I wouldn't get too fooled. If dollar SEK trades up here, don't get too bullish. Same goes for euro dollar. It's been a quiet start to the week, except for really today. Has been loud, if you will. We actually have rallied from support in the euro, though, right? This was a chart that was put out, started putting it out. Well, we've been looking at it forever, but 110 did hold, and we've rallied almost 100 pips off that in 3 days. We do have resistance again up near probably the mid 111s. The median line is the big important level. Okay, at this point, you notice that I pulled the euro short because if we start to rally here, there's a possibility that we get all the way back up to 1180, and that's an area that I'd probably be looking to short at. Basically 1140 to 1180 in the euro. If we get a knee-jerk reaction up there, that's your level to watch. And as far as euro bigger picture, exactly what I'm still looking at. It's the same thing we've been looking at forever, and that's the analog, right? So if we go to the weekly chart, this is the stuff that's on the long-term page. I think the next big opportunity to buy the euro is probably just a couple weeks away. At least that's when you'd really be on, we might be about like here, right? So if you line it up, if you line it up over here, it gets you the week of, that's the low, right? And that also is the same week as the high here. So, it was very spot on during that first rally and decline. And then since then, we've kind of gone separate ways, but that decline that we had last week seems to have brought us back in line with what's going on, with the comparison with with that 97 period, right? And what's so fun about this is if we do drop below the summer lows at the 108 area, obviously if that happens, we're going to break the bullish slope that we've been looking at on the on the daily chart, but we're going to have a 30-year trend line down here, and it's going to be like in the mid 107s, right? So just don't forget that, right? So if we start to break, I know there's like a lot going on here in this chart, but if we start to break below here, which is the lower parallel, which today looks to be like about 109 still, 109.10. If we start to break that, I wouldn't necessarily turn like ultra long-term bearish on dollar CAD under 130. Holy, dollar CAD 130.90. They are running as many stops as possible. Yeah, so if you were to get down here below 109, then focus again, this 30-year trend line shifts down into near 107. Okay, but I'd still pay attention to 109 today. Let's see, this is this decline in dollar CAD. Today's decline is 1.27%. It is the largest decline since April 15th, still April 15th. Still have a ways to go to get a new record, if you will, for the year, which was on the 18th, which was also a Fed day, actually, right? Well, at this point, dollar CAD, let's go back to the dollar CAD hourly chart. Crude's actually not even doing, crude's actually coming off a little bit. So this is pure FX right here. Okay, so at this point, I wouldn't trade that. It's not that clean. I wouldn't trade any of these until the lower parallel at this point, and that might actually be near 130. You've got the low over here, right? That low. So is it that out of the realm of possibility that that dollar CAD falls 100 more pips over the next day into 130.10 or so? Might be an area to think about a very short-term trade. At this point, I do think you have to, you also have the 618 there, would be 30.03, so that's nice. I think you have to, at this point, assume that this thing's turned over. Unfortunately, we didn't get a 33.15 run in order to get short, but if we decline here and maybe you get a resistance on here somewhere, yeah, exactly. I just saw a comment, Mark, back short the ML, right on. So if we get if this thing tanks here, then maybe you get an opportunity to sell back near 130, 150, which is actually the, again, weekly reversal, or 3160, which is again high volume and all that stuff. So these things can come back into play. You have to be as, I guess, non-emotional about it as possible. It's the only way to survive in this business. All right. Brian saying maybe a bounce for EuroCAD. I mean, I just want to short bounces. I don't even want to think about it. But if there's going to be a bounce, then I guess this is a good spot, as good as any a spot for it. This is the we just came into the weekly opening price, I believe, which was, or no, sorry, the weekly opening price is 44.80. So the low here is 44.95. So we're pretty close to that. But again, these trends have changed. This is a downtrend now in EuroCAD. Remember, we had the weekly chart on EuroCAD, right? Unfortunately, last week it somehow stopped us out. You can have the right ideas and all this stuff, and it doesn't. You'd still get burned and lose money. And here's a great point by Mark. I just need to trust good forks more. Sell upper parallels with low leverage. Yeah, I mean, it actually boggles my mind what people think of as low leverage in retail. Low leverage is like 0.5 to 1 or like 1 to 1. People say like 5 or 10 to 1. That's like really high leverage, right? Like I take a 10 to 1 leverage trade like twice a year. And 5 to 1 I'll take every once in a while, as 2.5 to 1 sometimes, and then much more lately it's been it's been lower than that, 1.25 to 1, which is the quarter trade size. But yeah, if you do the math, that can be really good money, and that's we've with our leverage over the last 2 years, we're still up over 120%. People come into this market and they think that they're going to make like 20% a month or something for whatever reason. It doesn't really work like that. But anyway, back to the market. EuroCAD, yeah, this thing's bearish again, going to maybe 140.35. That's the month or the year open, excuse me. So that's where we're looking. But as far as EuroCAD's concerned, we might be on our way there already at this point, given what's going on in the Canadian dollar right now. So, all right. So those are the big things that we wanted to look at. We could take a look at the British pound too. British pound. Pound might be headed for. This is a chart from last night. We're looking lower in pound. We've got, again, the analog with 90s suggests that a bigger drop is underway. And March is through at a level, 49.50. Yeah, exactly. It's a great level. 49. Yep, 49.50 right here. That's the weekly reversal level right down here, 49.52 actually. So that's where we're looking. So I do believe that pound dollar is a sell on any bounce, and yeah, is a sell on any bounce, and that bounce could find resistance not that far above here. You got 53.70 region, 70 to 80, kind of like former highs up there, and slope that seems to be okay here in the short term. Give it some room, obviously. See how FOMC wants to, see how the market wants to react to it. But, the dollar's turning down here ahead of it. Again, pound CAD might be even the better the better trade here. CAD everything looks like the better trade, right? And just to give you an idea on pound CAD, how far this thing might be able to go. Let's look at, I've got some longer term slopes on here. So we've bounced here from some old resistance and a median line. That this is your Schiff fork. In other words, it just is a trend line drawn off the low here and the low in 2014 in November. Ultimately, that would be the support you're looking for all the way down there, though, and that could be 1,000+ pips lower in pound CAD. And pound CAD actually has reversed at weekly reversal resistance here, the close of this week, the week of the high. So the close that week was 203.17. The high this week is 203.26. The high last week is 203.34. So it's adhering to price levels awfully well. By the way, the monthly opening price is 201.40 for pound CAD. So, if the market were to extend its losses here, look for a pullback into 201.40 to get short and get on board what could be a big breakdown in pound CAD. Might as well look at dollar yen, considering the BOJ is tomorrow. For some reason, I actually thought it was tonight, but probably because someone told me it was on Thursday, and Thursday is tonight in Japan. So really, it's not on Thursday. It's actually on Friday. Yeah. So it's Thursday night in the U.S., but it's really on Friday's trading day. All right, so dollar yen. Again, we still holding really long-term resistance, but still holding. Well, I say we're holding long-term support, but holding longer-term resistance. So, for me, I think the biggest thing to be aware of. This is the same chart from last night. The two levels I'd most want to trade at, probably 19.10.20 and 123.50.60. And again, I have no idea what happens with BOJ. I've said for a long time to colleagues and stuff that BOJ, they came out and they surprised in October. They've done it multiple times. Excuse me. But when they come out and they do something and it doesn't have the intended consequence on the market, like in other words, if they come out and they do something nuts and dollar yen rallies like 300 pips instead of like 1,000, then that'll be a sign that it's over and it's not, the dollar yen has changed trends, right? At least that's what I think. So either way, if they do something tomorrow night and the dollar yen ends up ripping all the way up to here, then there'd be a level I'd watch for resistance. So, but before then, in order to get on board such a rally, what if the dollar absolutely takes a dump here later today? Then I'd be watching for support again at 19.20. You have 19.87, which is also a level to watch. It's the monthly open. And you have an iffy parallel offer there. I mean, it's kind of like the midline, the 50 line between, you can see here, which was kind of resistance at the top here recently, but not all that great. And that same level is right here today. So 1987 is a level to be aware of, in my opinion, for support today in dollar yen, followed by the low 19 area, specifically like 1910, 1920. Got a lot of lows over there, obviously from September. You've got this lower parallel here as well. Okay, so if that were to happen, you get a rally, a dip, and then you could envision us going higher. okay, into that 23 area. But at the end of the day, even if I had no idea that there was such a thing as the Bank of Japan, I would still be looking at this really long-term median line as the really big level, right? I mean, here it is. This is it going back on the weekly chart now. It goes back to 2012. Essentially defines the entire rally in dollar yen. Oh, excuse me. The entire rally in dollar yen over the last 3+ years. And did you know, by the way, dollar yen's been up obviously 3 years in a row. It's never been up 5 years in a row. Or sorry, 4 years in a row. And we opened the year at 1987. So we're more or less unchanged. So it'd be interesting to see how this year plays out. I mean, in the history of dollar yen, we're going back over 40 years. It's never been up 4 years in a row. Not even during the bull market of the, the 90s or whatever. So pretty wild stuff. So anyway, you'd want to watch this line, this median line for resistance if there is indeed something bigger changing in the market. Yeah, this was last October 15th, we bottomed, and then obviously BOJ came in and did this. Okay, we bottomed this year on October 15th too. So resistance is up here near 123.90 this week or something. That's where the median line is, but that median line was resistance last year. Okay, right before you had a pretty decent decline. A lot of people thought that was it. And the BOJ came in and did their thing. So we've seen resistance on this before, and it may just be resistance again, right? So let's see. Japan is doing better now, so no BOJ is a question. I mean, I don't know. You never know with these people. Again, I'm not going to pretend to have any sort of insight. I'm just saying if something happens, maybe they don't even do anything. Maybe they come out and say something in dollar yen rips or tanks or whatever. My point is follow the levels, right? You have an idea of where you want to sell in the marketplace and where you want to buy. So yeah. And again with this. If this is a correction, if this is the Elliott count, in other words, if we're looking at a big series of 3-wave moves, you got 2 equal legs at 23.63. Got a bunch of stuff around 23.50, 23.80. 23.80 is something. I have it marked on here. What is it? I don't know what it is, but I have it marked. But anyway, 23.63 is where you'd have 2 equal legs. From the August 24th panic low, okay? So that's where you want to focus your attention, in my opinion, on dollar yen, if it gets there. But again, before then, the more immediate trade, what you were probably more interested in, would probably be buying this weakness, and 1987 would be an area to do it. Getting a little gun shy on buying these month open prices. After what's happened with me lately with some of these trades, have been just hasn't worked out. I don't know. But that's the thinking, right? When you start abandoning a strategy that's worked for you for a long time, it starts to work again. In any case, 1987 and low 1900s, the big area. And all this obviously, of course, begs the question, what's up with the stock markets? So here's the Nikkei. Nikkei is ripping today. All stock markets are ripping today, actually. You've got this really old, I'd say really old, but old from earlier this year, so it's not really old. It's former median line, right, which was very solid support here. It was resistance on this lower parallel after the August 24th crash, and it was resistance just on Friday. Came down, retraced everything into Friday, and actually getting back up towards this line. I was looking for support lower, which is why last night talked about dollar yen and having support lower. So that's where I would be watching for support. if something bearish were to happen the rest of the day. And similar story, by the way, in the S&P 500. I still have this slope here because I think it was so well defined and had so many touch points on it, especially down in here near the median line, the sliding parallel, and even on the lower parallel being resistance and everything, that I think it will probably come back into play. Yeah, Mark, that could work, man. So I'd be watching for resistance on this upper parallel. Again, FOMC, central bank fatigue I might have, but I've seen this game so many times that they come in, the market rips on it just because it's a central bank meeting or whatever, and then it turns around and falters. So might be watching for S&P 500 resistance up near 2101. That's the CFD, of course, SPX 500, the ticker, in the upper parallels up there. You've got a high up there. So the 819 high. So that's where I'd focus my near-term energy on as far as the S&P 500. And then as far as support's concerned, you've got former resistance here, okay? So you got the high here on the 8th. It was the 50 line, but it crosses really, really beautifully right through it. Okay, so I'd be watching for resistance or support on that line, former resistance. And then, of course, the median line. In fact, this is looking more and more likely. If we were to get there, you'd see support. Mark talking about, oh, I wanted to go through Kiwi, obviously. So, been talking recently about the Chinese equity market, right? Yeah. And we had identified good resistance in China and implying that Aussie and Kiwi were going to pull back, and they've started to do that, especially Aussie. But this is the area for support, I think, where you really want to start being bullish again on Kiwi and Aussie. It should help, I should say, time it. You want to start being bullish Kiwi Aussie at their own supports, obviously, but it gives you some nice intel knowing that, the underlying drivers, Chinese stock market, whatever, is at support. And support here is like 37.90 or something. And, that's the big support. This is a support here from these former lows, but the bigger support, in my opinion, is down here, just below 38. And, if that were to happen, put this chart up last night, you can see we're at the really long-term median line. We're going back years here, okay? This is the really long-term median line that we actually have hit in Aussie. But the really big place to buy it, in my opinion, is probably going to be on the sliding parallel, which has been much more precise than the median line itself. And that happens to be right at the low from 824 and the monthly open, which is 70.13. And of course, the month ends on the month ends on Friday. So that's what we're looking for. This is where I would be looking for big support in Aussie. Kiwi dollar. Oh, get rid of that. Okay, Kiwi dollar. The areas I think we're looking at, again, 66.15, our target 66.20, of course. And then that's the first area to watch for support. The even bigger area, could be down near the 64.50 to 65 region. You get the 61.8 down there. But kind of running out of time in order to get there, because if you get there, you'd be below this lower parallel. All right. So for me, for Kiwi dollar, I'd be watching again for ultimately 66.15 as a support. RBNZ's later, so I don't know. That's a wild card, of course. But that's where our short target is 66.20 because of the 66.15 level. High volume also is acting as super awesome support back on October 13th, in which we just totally ripped from the next day. If you get below there, then certainly would delay something bullish. But again, do think that Kiwi has found some sort of a much more important long-term low. Okay. And by that, I mean probably at least for a return back to this median line, former lows in the 71, 72 region, 71.50 in particular. So, you know, the theme here, pretty clear in my opinion, that we're looking back towards, you know, on a swing position basis, back towards higher levels in Aussie and Kiwi and China, and lower in dollar CAD, so higher in CAD, higher in oil, and Europe, not really sure, but that's where the trades are. Dave asking, are you logging IDO performance? I started today with 1 day and 5 day. I mean, okay, so IDO, it's not like a trading signal. It's just a tool, just like anything is, right? IDO doesn't take into account money management, doesn't take into account money management, which is the most important thing that you're going to do as a trader. So, you know, I use it as a tool or like a scan to kind of help maybe point you in the right direction, or use it as to confirm or keep you away from an idea, or things like that, right? It's not just going to spit out trades for you, because again, it's not giving you entries or exits either, right? It's just giving you probabilities and of moves. And sometimes it's more probable that a market is going to enter a much bigger move or trending phase than not, right? And so that's when I think it's useful, is when you start to see the reward to risk highly skewed on one direction or the other, is when it's worth really paying attention to, in my opinion. Other than that, be very careful as far as using it blindly, because I mean, look, it's not taking into account financial situation, not taking, only you can do that. It's not taking into account a whole bunch of important things like risk management, especially. Okay, it's a pure, it's an algo. So yeah, I mean, it uses for equities and everything as well. Pound Kiwi. I've actually come into support here for pound Kiwi. This is a weekly chart, so it's long-term chart. You notice that when I went through the charts for the Europe commodity crosses, I'm much higher on being short Euro CAD or pound CAD or even Euro Aussie than I am being short Euro Kiwi or pound Kiwi. And reason for that is actually, it looks like Aussie Kiwi is trying to turn up, and Kiwi support, if we do break that 66.20 area, then there's not support for like another, maybe 170 pips. So that means that you get a bigger bounce in in the Kiwi crosses, pound Kiwi, Aussie Kiwi, whatever. So as far as pound Kiwi is concerned, this is a chart we've been looking at. I wouldn't really look at this that much, right? we actually start talking about long positions that all the way back here. It just hasn't played out, but we might be going in some sort of a base here. And if we do, then the median line that right here, which was support, is going to end up as an interesting level for potential resistance down the line. Okay, and that would be in line with these former lows over here. So like 233.50 would be in an interesting area. So Raj asking right here, good place for TAR, use your charts. Awesome, bro. So I'd look at 233.50, 233.46 to be exact, just because, again, that's the median line, and you can see how good of a support that was back here. Okay, so that over the next day, if we get there, which is, look, we've got RB and Z later, so that's not out of the realm of possibilities. That would be an area to look at. Raj is 233.50, and then always you're scared of RB and Z. Well, if you're scared of RB and Z, then don't be in the trades ahead of it, or just make sure that you have a stop at break even, and everything will be fine. They do like to come in and talk down their currency. It's just what the guy does. So my guess is that you get an initial reaction on the downside, but we'll see. And that means in Kiwi, so pound Kiwi would go higher. I might be saying that because I'm biased because I'm short Kiwi, but who knows? Anyway, 244.36 is a big area for pound Kiwi, and then always want to be aware of where we open the month, okay? Because you'd be, well, maybe you're not surprised because you've seen it now for a long time, but be surprised how many times the market comes back and touches like week opens and month opens and stuff and pulls off of that, or even makes an important higher low on it. And in this case, that's all the way up to 236.27. You'd probably have to have a really, dovish RB and Z to get all the way down there, but just throwing it out there. Okay. Okie doke. So I am going to wrap it up. You've got FOMC, FOMC in like 3 minutes. Your levels to pay attention to here. Dollar yen, obviously, if you are going to fool around with FOMC, and I know I'm sure Mike went over all the shorter term levels and stuff, but just for me, what I'm following in particular is again 1987 in dollar yen, maybe this median line, wherever it may be. It looks to be like 120.90 or so in dollar yen. Those would be the two levels I'd kind of look at, over the rest of today as far as scalping off of them or whatever. And then euro, of course, pound 53.70 would be an area because I wanted to be short. So far, it does seem like this is the right interpretation for euro. Again, not something I'm willing to trade. You're coming off of support here, but it does look like we are set up for a final low in euro, which means it probably comes from here, given that you got a nice looking 3-wave rally from the low here. So one more low gets you 5 waves, and would be very looking at 109, 108.86 as support in euro, but that might not be today. That could be down the road. Anyway, that's it. Awesome. Everyone have a great rest of your week, and good luck.